We're 2.5 hours into trading on Wednesday, November 3rd. Hello, traders. Today is Fed Day. We are dead till the Fed. Everyone's waiting for the FOMC statement. Broad-based expectations are that we're going to hear that there's going to be tapering. Everyone's expecting the tapering to last about 6 months or so, and sometime in the middle of 2022. That is the first step to the tightening process. It's not technically considered tightening, but liquidity is going to be removed. So we'll see what the Fed's projections are for inflation right now. I'll just say that I read statements from a lot of central banks around the globe right now. They're all playing chicken with inflation, and they're trying to see who flinches first. Yields are on the rise, and eventually the market forces central banks to take action. And so they make it very easy for them to tighten because those prices are already implied in the yield. So we'll see. It's something that we need to keep an eye on. We had ADP came out this morning, a strong number, better than expected by about 150,000. It came in somewhere around 550,000 new jobs in the private sector during the month of October. Decent number. ISM services today, very, very strong number, a reading of almost 67, which is one of the highest readings I've seen. ISM manufacturing earlier this week also came in very strong. So domestically, the economic releases have been good for the market this week. I am also seeing some issues in China. They are really struggling right now. Xi and Li, two of their premiers, have come out in the last couple of days and have cited economic conditions that are slowing down. We also have COVID increasing in China to levels not seen since the Wuhan outbreak. It's been a long time. That's weighing on the country. Also, electricity is being rationed. So they're very low on coal and oil supplies. The important thing to keep in mind is that China accounts for 30% of the globe's manufacturing. So we can expect that these supply shortages are going to continue, supply disruptions, because they're having to ration electricity. China is also warning their citizens that they need to stock up on food for the winter. They see food shortages ahead. On the property front, some of these large real estate companies are having a very difficult time making their payments. A number of them are on the brink of default. China's also considering increasing, actually, they're not considering increasing property taxes, they're considering initiating them. They don't have any property taxes right now. That is going to compound the problem, and they continue to pressure tech companies. So China is not doing well. It's the second largest economy in the world. It has been the cornerstone for global growth. China is the one thing that we need to really, really keep our eyes on. I smell a rat there. I'm really cautious, thinking that they could have some credit problems. And out of all the things that can happen in the market, you have inflation, higher interest rates, you have wars. All of those things really don't mean that much. But the one thing that means an awful lot is a credit crisis. So credit is the one thing that we have to really, really watch. As long as there aren't any credit concerns, I don't see anything imminent right now, but we need to be very, very watchful. So in any event, the market hasn't done a whole lot. You can see how we've had that breakout to a new high. It's continuing to float higher in here. Pretty quiet the last couple of days ahead of the Fed. Really nice breakout, some good momentum. We've seen that previously. You get your pullback, get your new high, and then another leg higher. Now, the one thing that I am seeing today as I look through all my lists, I'm seeing that the biggest gainers are laggards. They have been stocks that have been badly beaten down. They are also some of the short squeeze stocks that we've seen. Retailers, for instance, brick and mortar retailers were super, super strong, almost like a short squeeze, short covering rally this morning. That's not particularly healthy for the market. Now, I feel that it could just be because this is an FOMC day and some of the programs out there are lifting these stocks up, just trying to get something going. But if we see this continue for the next day or two, that is typically a sign that a market top is forming. When you see that final push into all of those laggards. So I'm going to be watching for that. I am not looking for a big market pullback from now until year end. Any dip that we get will probably look like this. It'll be swift, could be pretty deep, probably will only last 2 or 3 days. Here's my message to you. You need to be ready to sell out of the money bullish put spreads because these dips don't last long. When you get the first really nice day, you should start selling some out of the money bullish put spreads on strong stocks. If you're lucky enough to get follow through in another day, you should add to positions there. Those trades should last you the rest of the year, and I'm expecting a little bit of a pullback. This strong rally tells me that buyers are still engaged. One of the most incredible market forces that we have right now is the fact that inflation is putting upward pressure on yields, but central banks are keeping those interest rates low. So the higher inflation goes with these yields staying artificially low, the greater the negative real returns that they generate. So if you take interest rates and subtract out inflation, you're losing money in bonds right now. And the higher inflation goes, the more negative that becomes. And that means that stocks on a relative basis are attractive to bonds. That's one of the things that's fueling this move higher is central banks. The other thing that we have is we've got companies like Facebook announcing a $50 billion share repurchase. This might not seem like a big deal, but that puts an underlying bid to the market. Why are companies doing this? Because they can borrow very cheaply right now by issuing cheap debt, and they use the proceeds from that debt to repurchase their shares. They see that as a very good investment because they know what their internal rate of return is. So they're doing that at a very fast clip. And if you take a look at how many shares have been retired in the last decade, about 50% of the outstanding shares have been repurchased. Apple alone has repurchased 25% of their outstanding shares in the last 5 years. That's just one company. It is a mega cap. It's one of the largest cap companies in the world. It is significant when you have lots of money slashing around, central banks printing money like mad. And when you have corporations buying back their shares, that means you have more money chasing fewer shares, which means the price goes up. So that is another incredibly powerful force. I want to leave you with this note. Know that the bid to the market is strong. Any pullback that we get will probably only last a few days. It could be on the notion that the Fed is going to have to tighten sooner than later. It could come after the FOMC statement today, but that move is going to last a few days. Sell your out of the money bullish put spreads on super strong stocks, and then let time decay take care of the rest as the market gradually floats higher into year end. This strategy allows you to take advantage of accelerated time decay, and it allows you to distance yourself from the action so that when prices get kind of choppy like this, you'll be able to weather the storm. So let's go into a 5-minute chart on the S&P 500. I forgot, I always like to start my videos by looking at the last pick that I had. I did a video Monday around this time, SOFI. Sophie was my pick of the day. And you can see this is about where the video came out, somewhere around that 22.20 level. And the stock is up to 22.95. It's making money. Instead of going back and cherry picking great trades and photoshopping statements like a lot of these YouTubers do, I would rather hook you up with a trade that looks really good right now. And then when I do my video in a day, maybe two at most, I'm going to go back and I'm going to review it. And I want you to see how that trade has done because you're able to take advantage of it when I do this, and you're able to see the trade real time. And I explain why I like the trade. I want to teach you how to be better traders. So let's take a look at what we've got working. We have the market doing a whole lot of nothing, dead till the Fed. Look at this chop that we saw yesterday as well. Lots of mixed green and red candles. As soon as a move gets going, wham, this starts to get organized on the downside, then we rally back. So this is nothing that we want to be trading futures on. Even stock trades we have been able to find in the chat room because we're trading relative strength. We're looking for technical breakouts, earnings plays, heavy volume. All of those things set up well for individual stocks. But as far as trading the market and trading futures, it's not a market that you want to be actively trading futures in because we have no market direction. We have no momentum. So the market rug is not going to get pulled out from underneath us. You want to wait for that FOMC reaction. The only way that I'll trade the FOMC reaction today, by the way, is if I see consecutive long red candles or long green candles stacked one on top of the other. And I don't want to scroll back through. This is not a big move for the SPY, but if we had like this, long candles, longer than what we see here, then I would be interested in shorting. And I would want to see us take out the low of the day very, very easily, like not even pause there, just wham, 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 wham. If I see that type of price action, then I will be inclined to take a short position because it tells me that the Fed will be more hawkish than everyone expected. And with the market where it is right now, I feel that surprise does favor the downside. Conversely, long green candle, long green candle, long green candle, blowing through the all-time high, relentless, never look back. Okay, tells me that the Fed is going to be dovish and that everyone was already pricing in tapering and that this market wants to go, go, go. If I do not see those consecutive stacked candles, and by the way, I don't want much overlap or retracement one to the other. If I don't see that type of reaction, I'm not going to trade it. And the chance of seeing a reaction like that is maybe 10%. There's a 90% chance that we are not going to get that type of reaction. We're going to sit on our hands and go, they're starting the taper. We expected the taper. And then the market will just kind of chop around again for the rest of the day and perhaps even the rest of the week. So that's how I'll trade the FOMC. Once that statement's out, if we get back into choppy trading like this, I'm going to be leaning on stocks that have relative strength. The market trend is still higher, so that's the side of the market that I want to focus on. I'm just going to go into one of my searches here, bull run. We'll take a look at a number of stocks. I do have a pick of the day lined up for you. So let's go through. We'll click through some of these, see what they're doing. And you can see GOLD moving higher after an early drop. Nothing going there. Amazon has been choppy. So when I look at a 5-minute chart like that, yes, I want to see it get through the high of the day. That's nice. We got decent little volume here. That's nice. I'm going to show you something. I'll put up my buy and sell signals. These are new to Option Stalker. I released them last week. We're on a really nice buy signal right in there. Really nice sell signal right in there. Beautiful short right in there. Anyway, Amazon chopping around, still kind of trapped within the last few days range. I want to see stocks that are breaking through technical resistance that have blue sky ahead. No resistance like this, prior day's high. See you later. This is a nice one. Let's see what that daily chart looks like. Downward sloping trend line. We're through all of that. Yeah, that's a nice one. Symbol on that is BITF. I believe that is a crypto stock. Nothing really going here. You can see you've got a little bit of overlap, a doji in between. You got some technical resistance above. This stock is weak. I do not want to be bottom fishing weakness right now. And as I've mentioned to you earlier, a lot of these stocks are simply short covering bounces. So as soon as the programs have run their course and they want to yank the carpet out from underneath you, they can, and the stock instantly reverses. Do not trade this. You want breakouts through technical resistance and you want Nice positive price action. Another bottom fisher. No thank you. No thank you. I'm just going through the daily charts. Interesting because now we have a horizontal resistance level that the stock is getting through. Higher low, double bottom, through the 100-day moving average. Earnings on the 9th. Okay, it's got room to the 200-day. That might be one that I trade, day trade. Probably would not want to swing trade it, but you can see it's trying to get going in here. I'm going to continue to look through the charts and see if we can find something that I really like. And let's go back and take a look at this. Is a nice stock through horizontal resistance. This is what I'm talking about. Look at this strength. That is a strong stock. This is not a bottom fisher. Look at the volume. Beautiful through this horizontal resistance. Fantastic. Love it. So yes, MARA looks great. Another crypto stock. Let's keep going down the list here. GDX, nothing going there. And this is nice, PATH. Bottom fisher though, so we're not going to be interested in that. Boeing, no, nothing doing. So I didn't find the stock that I wanted in here, but I know that it's been on my lists. UAA actually looks good through this horizontal resistance. Look at that gap up after earnings. That's nice. Only thing I don't like about it is that it has traveled that far and it's got a chance to run out of gas. What I would prefer is before that earnings reaction that the stock didn't have quite as deep a trough and that it was hanging near that horizontal resistance, tick, 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 higher so it didn't have to travel far to break out through that horizontal resistance, and then a clean break with a long green candle closing on its high. That would be my preference. This is a bottom fisher. I'm going to show you the type of price action that I was talking about. So you're at the 100-day moving average. This morning you come in and you see JWN running like crazy. Long green candles stacked. Everybody piling in. Oh, here we go. Then you get that big pullback. KSS was another. I could go on and on and on. There are a ton of stocks. Look at these long green candles stacked. That is a short covering rally, and then it just falls off. As soon as all these buyers rush in, then they pull the rug out from underneath you. So I'm not seeing the stock that I wanted on here, and I'm going to continue to look. And I don't see it coming up on any of the lists right now, but I do know that it's a good one. So I'm going to get right to it. AMD. Actually, there's one that I do like right there. KR, Kroger. I do like this breakout through the 100-day moving average and the 50-day moving average through horizontal resistance. That's nice. This stock has a chance to continue to grind higher. Go into the M5 list and take a look at what it's been doing intraday. You can see really nice relative strength in here. AMD is the one that I like. It's temporarily come off of our lists. It's been on some of the lists earlier today. You can see it's just kind of chopping around with the market, but it is near its high of the day, currently on a buy signal. Going to the D1 chart. I love this breakout. So you can see how on that breakout, you had an earnings announcement in here. It checks the bid, meaning it's pulling back, pulling back, pulling back, and then we get this long engulfing candle right here. Now it didn't take out these two tails, but it took out the bodies, and now we're actually through that high. I like it. It's got good volume. I think AMD continues to perform well. That's your pick of the day. Be aware of the FOMC meeting. Watch for that reaction. If you get those long green candles stacked, AMD is the type of stock that you're going to want to be long. If we get those consecutive long red candles after that FOMC announcement, you can expect that the market is going to pull back for a day or two, maybe three. AMD will be the type of stock that you're going to have on your radar, and you're going to wait for it to come back, come back, come back, and check that breakout right there at approximately the 122.50 level. Then you'll be looking to sell an out of the money bullish put spread, I would key off of that low right there around the 117.50 level. That still puts you above that breakout right in there. I like that 117.50 level. So then you'd want to sell a spread, a bullish put spread, keying off of 117.50, sell the 117.50, buy the 115, 3 weeks out or so. You're looking for a 50-cent credit on that. If you do that trade, you're going to make a 25% return as the market quickly recovers and grinds higher into year end. This is the type of stock that I think is going to perform really well. Thank you so much. Please give the video a thumbs up. Leave your comments. They inspire me to keep doing these videos. I take a break every now and then, so if I see you posting a lot of comments with questions, I'm going to be more inclined to do a video every day. Thanks so much. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.